Well, guys, thanks so much for joining us. I have Andy Hoffman from Miles Franklin for a very momentous update. Andy, how are you?
I'm very good. It's funny you use the word momentous because my article that I wrote on Wednesday, the day before the Swiss National Bank announcement, was called a historically momentous day because of all the crazy things that happened on that one given day. The copper crash, the bond yield crash through the flash crash level of October 15th, the Bitcoin crash, the horrible retail sales numbers. These were all on Wednesday. And that was just my historically momentous day, but that pales in comparison to this announcement by the Swiss National Bank, which frankly, it's funny how you still see people saying this was unexpected. I've been screaming this is going to happen for months now. And I mean, all you have to do is look at the Swiss National Bank's balance sheet. Look at the actual pair, the euro to Swiss franc. It was clearly on the verge of breaking. And, to me, this is one of the most important events that we have witnessed since the beginning of the end 15 years ago.
Yeah, and you and I have been documenting the collapse for a very long time, and ironically, this is just about a month since our last call. Now, the Swiss National Bank, unexpectedly to the mainstream media and the powers that be, apparently, but not to you, removed the peg from the Swiss franc to the euro. Can you explain to people what this means and why it may cause enormous fissures in the already cracking Ponzi scheme?
Yes, look, if you just go back to an article I wrote probably 2 years ago called The Final Currency War, it's very simple. At the end of a Ponzi scheme, countries' economies are they're so deeply indebted and they're in such bad shape that they feel politically that the only way that they can, drive business is by debasing their currencies and therefore creating market share by making it cheaper for people to buy things from them. This is what the Japanese have been attempting to do for the past 20 years and failing miserably. But now that all countries are in equal dire state economically and financially, they're all debasing their currencies dramatically. That's what's going on with the euro, with the QE, the massive QE that they're expected to announce next week. It's what China's been doing right now. It's what Japan just announced. And clearly, it's what the intention of the Swiss National Bank was when they initiated this peg. Because the problem with Switzerland is that it is viewed, because of its financial prudence, as a very, very strong currency. In fact, it was the last currency that was, in fact, gold-backed until they sold most of their gold about 5 or 10 years ago, at the lows, by the way. So the Swiss franc was going up too much during the big crisis of 2011, so they pegged it to the euro to make sure that they wouldn't lose market share against the other Europeans. The problem is that since that time, their economy has been horrible. They've averaged GDP growth of 0.4% per quarter over the past 3 years. They have some of the highest inflation in the world, which is why they had a referendum earlier this year to raise the minimum wage to $30 an hour. So it hasn't worked, but what it has done is it's caused the Swiss National Bank's balance sheet to triple or quadruple over that time by buying, they print francs and they buy euros. And the problem is they have all these euros in their balance sheet that are collapsing. So they have an uglier balance sheet than either the Fed or the Bank of Japan, and it's not working. And now the ECB, the SNB clearly realized that the euro is going to collapse between the QE, the Greek elections, all this stuff. They literally can't do it anymore. They're going to destroy themselves if they hold on to it. So they had to get rid of it. And anyone looking at these factors I'm talking about knew that this was going to happen. And the ironic part of it, of course, is we're only 6 weeks past the referendum to save our Swiss gold. Remember, all that propaganda, which was, of course, accompanied by massive manipulation by smashing the gold price to make it look unattractive, they were saying, you need to vote no on this because we need to be able to maintain this peg with the euro. And, of course, even though it hasn't helped the country, they were saying it would be catastrophic and we can't peg it anymore. So what they do, just 3 weeks after that, they lowered rates to negative because they knew that this peg was about to go and they were trying to make the Swiss franc look worse. And here we are 6 weeks later and they got rid of it entirely. And the other thing which I wrote about, Thomas Jordan, as I call him, Lady Macbeth, because he doth protest too much to gold, he was pretty much hinting at people, if you vote yes on this gold vote, it's going to make our stock market crash, and that's what he was trying to scare into people. So what happened to the Swiss stock market yesterday when this was announced?
Down 10%.
It fell by 15%, the biggest drop in 25 years.
And why is that? Why did their stock market crash just because their currency went up? Can you explain that?
Well, why are the European stock markets, why the German stock market hit an all-time high today when its currency is crashing like the Russian ruble? Because we're in as David Stockman called it, a deformed world where black is white and white is black. Of course, in the long run, it's good for the Swiss franc. In fact, no matter how much they shot themselves in the foot, at least they were smart enough to not join the euro, which is going to fall apart. So in the big picture, it's good for them. But from a market perspective, from a Keynesian perspective, people, despite the fact that having this weaker currency hasn't helped them one bit, the thinking is, well, now they're going to have a real problem with their exports because the currency is so weak. But of course, generally speaking, it's very good for the country because it means that they're going to have much lower inflation. It's all just games of algorithms and propaganda and deformation of thinking. But the big picture is all that isn't working. The manipulations are failing. All they have left now is the Dow Jones propaganda average and the paper gold price, which it looks like they may have started to lose. In fact, frankly, the title of yesterday's audio blog was called "The SNB Starts and Ends the Gold Bear Market," because if you recall, it was September 6, 2011, when they initiated that peg, which of course is about the most gold bullish event in history, and that's when they and their partners, the Fed and who else, started smashing the price down of gold, because it was such a bullish event. And here we go 3 years later when they get rid of the peg, and look what's going on in the gold market, look what's going on in the currency markets. People are realizing that gold and silver are real money, that euros are not. The euro, believe it or not, is the biggest currency in the world. It's more widely used than even the dollar. And it is free falling ruble style right now. It is a very, very big deal. And this event, in which they basically isolated themselves from Europe and a fear of what's going to happen, to me is going to, as you say, cause major fragments and fissures in the central banking system.
With gold breaking back above its 200-day moving average, as you say, it's clear now that the world is recognizing, and the markets are recognizing, that gold and silver are real money. And in panic situations like this, people turn to real money, real assets. Like we've been talking about forever, you need these insurance policies against a worst-case scenario. And against monetary printing without recourse and out-of-control monetary printing, you need precious metals in physical form. So a couple of questions. What do you foresee for the euro? Is this the death nail in the euro? Because for a long time we've listened to pundits predict whether or not the euro would crash and be the first Ponzi scheme to crash, or would it be the dollar? At this point, it appears to be sort of the last nail in the coffin of the euro, or am I overstating it?
Well, let's just go back. I'll get that in a second to, physical. You say times of crisis, people need physical. And so, because of all the paper smashing the last few years, some might say that aren't really observant that it hasn't been a safe haven. The point is that in 2013, we had record global demand for gold and silver. And in 2014, we broke both records for physical demand for gold and silver. So people have been buying it hand over fist. It's all been just increased manipulation of the paper price, really, which started in 2011 on that day when the Swiss made that announcement, and frankly, it accelerated on April 12th of 2013. That was when Obama had his meeting the closed-door meeting with the too big to fail CEOs, and all of a sudden gold fell $250 in the next 2 days, and it's been ongoing since. But the point is, people have been buying, and we have been seeing shortages in silver. We've seen them in 08 and 11 and 13 and 14, and you can bet we're going to see it now. So yes, people have been buying, and they're going to buy more than ever. Now that, as I've been saying all along, currencies are crashing around the world. Gold and silver, forget what they're doing here. Gold is soaring in terms of other currencies. Right now, as we just closed on Friday here, gold is only 2% from its all-time high in yen. It's only 20% from its all-time high in both euros and rupees right now. And in many other currencies, it's at or near it too. So it's been soaring around the world. So you're going to see more and more demand. And of course, now you're really going to see the Europeans buy into it. And there's more Europeans than there are Americans. Now, as for the euro itself, you're saying, is this the death knell? I would say, my thought is I think you are overstating. I don't think the Europeans need the Swiss for anything. In fact, I think they were really trying to sabotage them when Thomas Jordan was trying to get that vote not to pass the referendum. It almost seemed like they were sabotaged. Remember, one of the ECB governors came out and said the ECB was considering buying gold a week before. So I think that they're really at odds with each other, and I don't think that they need the Swiss. But what the Swiss are saying is basically we are terrified of the euro. We think it's going to go down a lot further. What's killing the euro is the fact that, as we've been talking about all along, it was dead in the water from day one. It was dead in the water in 2011 and 2012 when the pigs were collapsing. And just because Draghi said we're going to do whatever it takes, all he did was buy himself 2 years of confidence. But the fact is, Europe is in dramatically worse condition than it's been ever. And right now, you're seeing splintering. Greece is going to secede from the euro and renege its debts. And then you're going to see the other pigs do it. And you're going to see France do something big when Marine Le Pen becomes president in the next year or so. So yes, I think the euro was doomed from the start, and this is the beginning of the end phase of it. But I think the Greek vote next week is a far bigger event than even this Swiss announcement.
Okay, Andy, now let's move the conversation back domestically to the U.S. economy. I'm curious to get your thoughts on the economic data coming in, where things really stand. I can tell you that we know firsthand, based on the business that I do every day at my day job, the economy is slow with many of our partners. And another piece of data, I used to be an executive at Target, and they've just announced that they're shutting their entire retail operation in Canada, and they've lost more than $2 billion on that venture in what is going to be chalked up as one of the biggest retail debacles in the history of retail. Let's talk a little bit about the economy. There's 46 plus million people on food stamps in this country. There's 92 million people out of the workforce. What do you see? Is there any rosy scenario for the U.S. economy, or is the next shoe about to drop?
Rosy scenario for the U.S. economy? No, there's definitely not. I will say about Target, without having seen the data and all this, I will bet anything that a major part of that problem in Canada is the currency, with the dollar strengthening so much against the Canadian dollar. And this is exactly what I've been talking about for years. When I wrote the single most bullish precious metal factor imaginable, I was talking about the volatility in currencies, and more importantly, the crashing of currencies at the final phase. The reason the dollar is surging now is not because the economy is strong, it's because everyone is fleeing to liquidity. And as a result, you see this massive, massive increase in the dollar's value against other currencies, which literally destroys American corporate earnings. I mean, you are going to see the worst corporate earnings America has had since 2008. I think the forward earnings for this year are already negative, and that's before most companies reported. And I guarantee you that this surge in the dollar, as well as the plunge in oil prices, is going to be absolutely catastrophic for American business. And you haven't even really seen it come out yet. It's going to start coming out now in droves. Now, as for the economy in general, well, let's put it this way. I wrote an article on October 7th of last year, okay? That was called 2008 is Back, with one temporary exception. The one temporary exception, of course, is PPT Group's stock markets that try to mask it. But I was saying back then on October 7th, 3.5 months ago, that it was clear that the global economy was collapsing. That's when Japan was doubling up on their quantitative easing after announcing their worst economic data in decades. The ECB was reporting that they were in a recession and getting ready for QE. China was starting their QE because their whole bubble was collapsing. And the Baltic Dry Index, you name it. And of course, the real numbers here in the States were all bad. The industrial production and the retail sales of durable goods. The only thing that was left is what I call island of lies data. The BS unemployment reports and some of those diffusion indices which make no sense at all, etc. Today was a perfect example. The consumer confidence index hit a 10-year high at the same time that retail sales are hitting multi-decade lows. But the point is, I said that back on October 7th. That was before oil price crashed by 40%. That was before the CRB index crashed. That was before the ruble crisis. That was before the euro crash. That was before all of this data has gotten much worse in the United States. Even the diffusion indices are falling dramatically. So And I think right now, my comment is that at this point in time, this is the single worst the global economy has been in our lifetime. This snapshot in time. The only times it might have been worse were maybe for a few weeks, as I call them, deer in the headlights weeks, right after 9/11 and right at the heart of the 2008 crisis. Aside from that, everything is much worse. And when you look at Europe, their unemployment rate is dramatically higher, the debt is dramatically higher, the social unrest, geopolitical tension, economic data, everything is worse. And of course, you talk about here food stamps. Think about how much better we were, how many less people were on food stamps in 2008. What our debt load was. Our debt load was 10 trillion in 2008. It's 18 trillion today, etc. So I think this is the worst ever. And now that the oil price plunge has hit, oh my God, wait till you see. I mean, even the best book hookers in the entire planet will not be able to prevent the U.S. from reporting massive recession in 2015.
And Andy, yes, let's just flesh out briefly the falling price, the plummeting prices of oil and copper. Don't you find it fascinating that in this environment, the best performing assets we're seeing in this nightmarish environment are gold and silver? I can't get too excited about it yet with silver just in the 17s, but I'm telling you, the day in the sun is coming for the precious metals because all of this paper malfeasance can't be covered up with more paper forever.
Oh, look, when it all comes down to it, how often can I talk about, not to pick on newsletter writers specifically, but anyone who puts themselves in this deflationist camp, okay? No, look, no one has written more about deflation than me. I wrote Death by Deflation a few weeks ago. I wrote the direst prediction yet, which was that commodity prices, until hyperinflation hits, are going to go much lower and stay there for years because of all the overcapacity created by the money printing over the years.
Right.
But deflation is not bad for gold. Now, when you get these people out there saying, well, everything's going to go down because of deflation, no. What deflation does is it kills economies, it causes governments to print more money, and it causes lack of confidence in the currencies, which is why people run to real assets of value. And the only real asset, real money that has proven itself over history are gold and silver, which is why during the 1930s, I know it was another world, gold and silver were the best performing assets, which is why during the 2008 crisis, it was the best performing assets. And no, I'm not including the first few weeks where they attacked it, because at the heart of the crisis, when the Dow bottomed in February or March of 2009, gold had already recouped all of its losses and was at a new all-time high. And of course, here we are with commodity, the Bloomberg Commodity Index at a 12-year low, the oil price at back to 2009 levels. So we talked about the copper crash and the base metal crash the other night. Everything is crashing, and look at this. Gold is not only going up in U.S. terms, it's exploding in foreign terms right now.
Yeah, and just to sum up, you wrote in Overwhelmed by Reality, when anyone tries to tell you the stock market can be permanently propped or precious metals suppressed, simply look at what happened to the Swiss National Bank and realize that all manipulations, particularly in precious metals, can and must come to a hideous, catastrophic end. I think we're seeing it, Andy. We've been documenting the collapse for a very long time, and I don't think there's any better way to describe this than a collapse. The last question I have for you is regarding hyperinflation. We've been following the work of John Williams for so long. Back in 2011, 2012, when I started to report in earnest about John's predictions for hyperinflation of the U.S. dollar in 2016, that was so far away. It's a year away now, Andy. Where do you stand on hyperinflation of the dollar? Do you see that in the cards anytime in the near future?
Well, I'm going to address both things you said, and then we'll finish here. One, the most important thing that should come out of this call for listeners is what you just referred to, that quote, my article today, Overwhelmed by Reality, which follows another article from a few weeks back called The Unstoppable Tsunami of Reality. The point is that central banks, people have forgotten in recent times because they become so all-powerful in manipulating markets, they always lose. The Swiss National Bank literally destroyed itself. They so badly lost this hideous gamut into suppressing the price of the franc. They lost their credibility. They lost tens of trillions of francs. They destroyed the balance sheet of the nation and their own balance sheet. I mean, this is what happened to the London gold pool. This is what happens to all these manipulations. The Fed will lose just as badly as the Swiss National Bank, the ECB, the Bank of Japan. They will all lose, and probably a lot sooner than people can think. And as for hyperinflation, again, people should read this direst prediction yet. It was my first article of the year, saying, and this is a lot of the credit goes to David Stockman, about how so much overcapacity has been created in this planet because of the money printing and the Wall Street financial engineering and creating all these subprime and securitization vehicles to finance everything from ghost cities to student loans, you name it. There's so much deflationary pressure in the system right now that there is no chance of any real gains in any of these asset classes anytime in the foreseeable future, and I mean decades. So what's going to happen is you're going to see weaker and weaker economies and weaker prices until eventually Janet Yellen does what I call the Yellen reversal. I mean, you saw the Bank of Japan pretty much gave up the ghost when they doubled up on Abenomics a few months ago, which is why one of my predictions for this year is the first signs of hyperinflation in Japan. Ultimately, what the ECB is doing now is going to set them up for the same thing. And finally, last but not least, it will be the dollar. Because again, as I said, people will flee to the dollar. They'll flee to the dollar's liquidity as everything collapses. Once all the other currencies collapse, it will be the dollar's turn. It will be the last to go. But in the meantime, everyone will also be fleeing to gold and silver. So I wouldn't worry so much about hyperinflation yet, other than to be prepared. Have your stores of food. Don't have money in the banks and be ready. But don't think that hyperinflation is going to happen tomorrow. But it is coming, and it's going to happen around the world a lot sooner than tomorrow.
Well, Andy, when the SNB announcement happened, it was a surprise, and you were the first person I thought of. This has been our first opportunity to get together and dissect it as we document the collapse. There's nobody more knowledgeable about it than you. Tell people how they can do business with you guys if they want to buy physical precious metals.
Yes, Miles Franklin, we're in our 26-year business. You can call us at 800-822-8080 or email me at ahoffman@milesfranklin.com.
Very good. Our guest has been Andy Hoffan, the media director, writer, and precious metals pundit over at milesfranklin.com. Andy, thanks again for your time.
Great. Have a great weekend.
All right, you too, guys. Everyone have a great week ahead. Thanks so much for tuning in and checking us out at sgtreport.com and the Liberty Minute. We very much appreciate your support.